So, hot on the heels of the changes around the tax relief is the introduction of the national living wage. And this is a really unusual piece of legislation. And again, the explanation is that they wanted to see a higher wage for more experienced workers. So basically what they did was say anyone that's over 25, then they'll pay a premium, or they'll be entitled to a premium of 50p per hour on top of the national minimum wage. So in effect, it's like adding another strata, and we'll look at this in a second. So the national minimum wage continues as previously, but there is now this premium that's paid for someone that's 25 and over, which is the national living wage. Well, when the national minimum wage was brought into existence, they also created the Low Pay Commission, which is an independent organisation. And it's the Low Pay Commission whose job it is each year is to evaluate and review the effect of the national minimum wage. So the idea is that they will talk to business, they will talk to the unions, they will try to come up with what they believe is a fair figure that then should be applied to national minimum wage. So when the government and George Osborne announced in the budget that he was going to add this 50p premium, the Low Pay Commission were understandably a little bit perturbed by that, because ultimately he politicised something that has traditionally been independent and non-political. And he set it at 50p, and that's what he decided. Probably a nice headline figure, and that's where he went. So what George Osborne has asked the Low Pay Commission to do, he said, right, okay, I'm going to give this 50p rise, this bonanza, but what I want you to do then is I want you to have a look at what that should be going forward. So the Low Pay Commission have been asked to make recommendations to the national minimum wage from August 2016, as well as indicative national minimum wage for 2017. And that report was expected in February. It's still not come out at the moment, not that I found yet anyway. So we're going to have a national minimum wage increase in October 2016 as normal, and a national minimum wage increase in 2017. They've then been asked to look at what level of national living wage, so what premium is the right premium. Is 50p the right amount? Should it be more? Should it be less? Who knows? Should apply from April 2017, and an indicative rate for 2018. So that suggests that we're not just going to have this 50p an hour. It suggests to me that we're going to be looking at a 50p an hour plus potentially in April 2017, and then something different in April 2018. And that report is expected by October 2016. But potentially what we've got is 2 pay rises a year for people that are 25 and over. So you'll have April 2016, they'll get an extra 50p, so that'll take them up to £7.20. Then there'll be a national minimum wage increase in October 2016, so say that goes up to £6.80, it'll push it up to £7.30. Then in April 2017, the national living wage could go up again for those over 25, and then in October 2017, the national minimum wage will go up potentially, and then in April 2018, the national living wage will go up. So we've got a 2-year period where potentially you're going to have to stomach 2 pay rises a year for anyone that's 25 and over. Now, it's obviously possible that the Low Pay Commission will say 50p is the right rate, and it will stay at 50p and it won't go up beyond April 2018. But I think from the language, I think the suggestion is that they expect to see that 50p will go up as a premium, and I would have thought national minimum wage will go up as well. So rather than 1 pay rise a year in October, be looking at a pay rise in October and a pay rise in April, certainly for the next 2 years. As things stand at the moment, till October this year, young workers rate, so someone under 18 gets £3.87, the apprentice rate is £3.30, the development rate between 18 and 20 is £5.30, the standard adult rate £6.70, and then the national living wage 25 and over is £7.20. So it's just basically added this last sort of strata, this last box into the situation. But as I say, certainly for the next 2 years, I think we'll be seeing 2 pay rises for anyone over 25. So, because national living wage takes us up to £7.20, it brings in my experience, a whole strata of workers and employees that previously we've not really had to worry about national minimum wage too much about, because that 50p an hour gap between 670 and 720 has meant that even if they did a few extra hours or we didn't quite capture the time correctly, well, the extra 50p an hour would mean that we never went below national minimum wage. Well, going forward, you know, national living wage is the same as national minimum wage, and the fines and the sanctions are the same. So if you breach the £7.20, it's the same sanctions as if you breach the £6.70. So how do you work out whether someone's received national minimum wage or national living wage? Well, it is relatively straightforward. It's the total remuneration that they've earned over a relevant pay reference period. If you pay weekly, it's that week. If you pay monthly, it's that month. So that's the pay reference period. So for most temps and flexible employees, they're paid weekly. So that'll be the pay reference period. So you look at the total remuneration paid in that week and divide it by the total number of hours that have worked in that week. And that should give you the pay rate, the hourly rate, and provided it's above £6.70 if they're under 25 or £7.20. If they're over 25, you can rest easy, there's no problem. And, you know, what counts towards national minimum wage? Well, obviously basic salary does. Bonus, commission or other incentive payments based on performance do, but this is one that people often don't realise. Overtime or shift allowances don't count towards national minimum wage. Piecework payments, accommodation allowance and HMRC allowances, but the main ones really for us are basic salary and any bonus, commission or other incentive payments based on performance. Overtime with temporary workers and flexible employees is a phrase that's often used but not often correctly used. At the end of the day, no temporary worker will have overtime in its true legal definition sense. They are flexible employees that are required to work when you require them to work. If they get paid an enhanced rate, then that's because either AWR's kicked in or that's the agreement is if they work beyond so many hours in a week, then we will pay them extra money. So really, we need to be careful about what we call it, because if we call it overtime, then HMRC will come along and say, well, if you're doing your calculation and you're £7.15 because of something that's happened, but you're £7.50 if you include overtime, you'll have a breach. Whereas if you've called it, you know, it's just a different rate, that's what we will pay you. Your hourly rate for this particular hours is going to be this, then you would be able to include it. So you just need to think about how we word it in the contracts. So, you know, it's the obvious one. So if they normally work £7, receive £7 per hour, and then they're paid £10 per hour for overtime worked, only the £7 will be taken into account. The £10 an hour for overtime won't be. And it's just a quirk of the legislation that often isn't realised. But if they're doing different rates for different jobs, and again that could be something that temporary workers are doing, then that's fine because it isn't overtime. So we just need to be really careful in contracts, in practice, about what we call overtime, because we use it as a phrase in circumstances where actually it doesn't apply. It might apply to the end users, it might apply to your employees, but it won't apply to temporary workers because ultimately it's not overtime because they've got no set hours in a particular week anyway. Some deductions and payments that we make at source don't reduce national minimum wage or national living wage. So if you've made a deduction from pay under the contract due to the worker's conduct, then that won't bring you below national minimum wage. So, you know, recovering training costs. So I've just had a big argument with HMRC about how we recover forklift truck driver licensing fees when someone leaves. So one of my clients pays up front, and then provided they've worked so many weeks, then they'll get it for free. But if they leave before they've paid for it, then there's a clawback in the final week's salary. And we've used this case successfully to argue with HMRC that actually that deduction doesn't bring someone below national minimum wage. So, you know, I think the pay for the final week was something like £500. They receive in their hand 150. They'd worked 30 hours, so they were below national minimum wage. If it was the 150, we argued it was the 500, and HMRC eventually agreed that the 500 was the right figure. Deduction to repay a loan or advancing wages. a deduction to repay an accidental overpayment of wages, all those things won't bring you below national minimum wage. Yeah, so if you purchase goods or services from the employer, unless by the contractor or as a condition of employment, my advice would be don't make deductions at source for these sorts of things. Do it separately because it's very difficult to prove that it's not a requirement of the job. So uniform costs, training, anything like that, you've got to be careful about. Pensions, union subs. And very bizarrely, typical of the government, they forgot to actually include in the legislation that deductions for tax and NI wouldn't bring you below national minimum wage. Took a case to clarify that, but common sense tells you that any deductions you make at source for tax and national insurance won't affect your calculation for national minimum wage. So what counts as working time? Well, actual work, obviously, so the amount of time that they spend doing the job. Not time absent from work, rest breaks, even if they work voluntarily during their break. This can sometimes be a point of conflict, the voluntarily bit. So, you know, if there's a habit on a particular site with a particular client of having to work through breaks, and those breaks aren't paid, so, you know, over a week, they've perhaps done an extra 2.5 hours work, and they're only getting paid £6.70 an hour, then their argument is, well, I was made to do it. I didn't do it voluntarily. Then working half an hour through the non-paid breaks would take you under national minimum wage by 2.5 hours, whatever that works out. Striking doesn't count as working time. Standby or on call, there's loads of cases around the NHS. So the basic position now is that if you think about a hospital doctor who's on call, they won't spend the whole of their night shift on the hospital ward. They'll have a room where they can put their head down and go to sleep. And the argument was, well, actually, the whole time I'm in the hospital, I'm entitled to be paid, or I'm entitled to national minimum wage. And the courts have ultimately said, no, when you're in the bedroom asleep, then you're not entitled to be paid. But when you're on the ward, then you are entitled. And that's the same if you've got anyone that's on call in the business or on standby. So if they've got the works phone, then that would be okay. But obviously if they've got the works phone and they have to go and do something, then that's when the clock would start from a working time perspective. And as I say, unless the worker's sleeping, and that's permitted sleeping rather than falling asleep around the back of a warehouse, which often happens. And then some things that have come up recently that are a result of HMRC investigations. So I've got one at the moment about searches. So an industrial distribution centre has got bigger and bigger and expanded, and what's happened is no one's engaged brain and realised that they've only got 2 turnstiles and 2 security guards to get everyone in and out of the building. So what happens is you finish your shift, you clock off, you walk about a quarter of a mile, you get in a queue, you stand in a queue for up to 45 minutes to go through to the other side. HMRC's view is that the working time doesn't stop until you step out the other side of the security search. So on average, that's between 45 and 60 minutes from the end of their shift it can take to get out. That at the moment, back of a fag packet calculation, could cost our clients and the end user the best part of about £2.5 million, plus fines, liabilities and naming and shaming. It may not end up that far because there is a debate about, you know, one of the things I've said to HMRC, well, how far does this go? So you're on a busy industrial site and it takes 20 minutes queuing to get out of the car park to get onto the main road. Is that working time? The answer is no, because there's a choice. They could choose to walk, they could choose to go on the bike, which is a bit figurative and creative, shall we say, but that's their position at the moment. The position is that if you have to go through it, so they can't ultimately say, I'm not going to bother queuing up today to go through the turnstile, I'm going to pop round the other side, then that would be completely fine. But because they've got no option and they've got a queue to get out, then their view is that that's working time. Machinery breakdowns, another one that I've had recently is people working in a waste site, an environmental site, with a conveyor belt, and basically it's picking bits of plastic and putting plastic and metal, and sounds the most horrendous job ever. But this conveyor belt regularly breaks down, and it's either a 2-minute kick it and it starts working again and it's fine, or it can be a 3-hour call out for the engineer to sort it out. And when that machine breaks down, all the workers are stood down, they all have to go and sit in the canteen until it's working again, and then they come back. But the time they're sat in the canteen, they don't get paid. And again, HMRC's view is, well, if they're allowed to go home, then that's fine. But the fact that they've gone to sit in the canteen, you've made them sit in the canteen and wait until the machine's been fixed, means that that's working time and they should be paid for it. And then training is another popular one. Where does a interview or an induction turn into training? And that's a perennial debate with HMRC. Their view very much is that once you are being trained, once the offer has been made and you've started to do work, then you should start to get paid. That counts as working time. And they're not changing that position. So once the offer has been made, if any training is undertaken, then that training should be classed as working time. Now, if they're earning £70,000 a year and they've got to do half a day's training, they're clearly not going to go under national minimum wage. These sort of issues are really prevalent when you've got people on or about national minimum wage. And the point is, now we've got £7.20. So for one of my clients, we've just done an analysis of the number of people that brings into scope. Now we've gone to 720 from 670, and it's basically added 75% of the workforce into the danger zone of making sure that we accurately record and measure their working time, because any slight mishap means that we could end up facing sanctions and an investigation. And enforcement isn't nice. So the assumption from HMRC when they come in to see you is that you're not paying national minimum wage. That's the approach they will take. You've not paid national minimum wage, national living wage. You prove to me now that you've been paying it. My experience shows that if you prepare, you do quite well. The resources aren't there, so what we tend to do is present them with very thick files of all the contracts of employment, flow charts of the processes of how we measure time, sample page sheets. And the last one we did was basically 2 lever arch files of boom, there you go. And as I say, they tend to accept that at face value then, because you get over that initial hurdle of, well, prove to me you know what you're doing, or we know what we're doing, so they relax. Because they're used to going into all sorts of circumstances, and they'll normally go in even when they've had a tip off. So what you're finding now is with the introduction of tribunal fees, people are a bit reluctant to issue tribunal claims if they don't feel that they've been paid the right amount of money. They can ring HMRC for free on the National Minimum Wage helpline. That will trigger an investigation. You'll get a letter that says, we've had a complaint, we're coming in to see you, make yourself available at this time, and we'll be here at that date. So you normally get some warning, they don't normally just pitch up. And obviously they'll come to talk to you about that person, but what that will also then trigger is a look at everything that you do. Media accusations, this is the one with the searches, that's come from, no worker has complained about not getting paid the correct amount of money by waiting for these searches. HMRC are investigating on the back of The Guardian putting in 2 undercover reporters on this particular site and publishing a story in the Guardian paper, which then obviously went across HMRC's desk. HMRC have now triggered an investigation as a result of that, which we find quite amusing and have made quite a lot of points about whether they're entitled to do that. At the end of the day, they have really wide powers, so they can do what they want ultimately until you can prove you've paid national minimum wage. So what sanctions? Well, notice of underpayment, so it'd be the shortfall in the national minimum wage or national living wage that you've not paid. So the last one we did, or I did, we ended up with a notice of underpayment of £93, £100 penalty, and because we were under the threshold, no naming and shaming. But that's what they'll do. So they'll look at what the shortfall is. If it's just one person, obviously it's just that one person. If it's going to be like with the searches example I gave you, how they're going to do that, I don't know, but that will be back 6 years for everyone on that site that's gone through. And I think there's about 4,500 people gone through our book since 2014 on that site. And then you get a penalty on top of that, say minimum 100, maximum 20,000. And that's for each worker, not for each offence. So it used to be up to May 2015 that it would just be a £20,000 fine. If you've got 1,000 workers that you've not paid correctly in respect of national minimum wage, that could be up to £20,000 per worker. Now, it's unusual for it to go to that level, and they reserve that for situations where it's been a clear, flagrant breach. And likewise, the criminal enforcement and the unlimited fine tends to be flagrant breach as well. But the one that causes people to panic the most is the naming and shaming. So each quarter, you've probably seen it, they'll release a list of employers that they've caught not paying national minimum wage, and from April not paid national living wage, and that goes out and causes a little bit of a murmur and a flurry. And the majority of naming and shaming, the majority of underpayments and enforcement action is taken in respect of technical breaches. So everyone has the best intentions to pay people. It's just that they've not, in the searches example, appreciated that actually they've put the clocking off machine here when HMRC say it should be by the door as they're walking out the door. No one intended that to be that way. It's just the way that it's worked out. And that's what happens with the vast majority of those situations.
With regards to the fines, who's that come down on? The end user or the agency?
It will normally be the employer, so it will normally be the agency. In most cases it will be the agency because they'll be very clearly the employer. Trying to think of circumstances where it might not be. I can't really think of anything off the top of my head where it would become the end user's problem unless even in the situation, so for instance, that example of the searches, it's the end user's time recording system that's in place, and they then give us the information. Yeah. So as an agency, we're saying, well, we can only pay on the information that we're receiving from the end user, but it doesn't matter. We're the employer. We're the one that has the duty to ensure that national minimum wage is being paid, so we're the ones that ultimately will have to pay the notice of underpayment and the penalties. And only really in circumstances where there's some debate about who the actual employer is, would the end user be responsible. But the problem you've got, for instance, in that case, it was nothing to do with the temporary workers. It was the end users' employees who brought it up, and the agency's now been brought into it. So it can work both ways. So if there's a problem with the agency, it probably will end up at your door as well, in which HMRC will come in and want to see your records too.